Let's get back to the markets right now. For that, we bring in Chris Zaccarelli. He's Chief Investment Officer at Independent Advisor Alliance. Jeff Saut, who is Chief Investment Strategist at Capital Wealth Planning, and our very own senior markets commentator, Mike Santoli. Mike, we got a lot of big things happening this week. The biggest week of earnings to date. But then you've got the Fed and you've got the jobs report.
Yep.
Which matters most?
I think the earnings continue to matter as an ongoing issue, just better than expected. Reassurance that the freak out in August about recession was probably overdone. The Fed is interesting because the past 5 Fed meetings, you've actually had an occasion for a pullback in the market, a couple of them pretty stiff. It seems like the market, though, isn't demanding very much from the Fed here. Maybe we're okay with a cut this week and then going on hold. So
what if there's no cut?
No cut would probably cause a little bit of a flutter. But on the other hand, I don't think it's happening in the context of a vulnerable attitude about the economy, just because the yield curve is uninverted and you have this situation where it's not as if the people are going to think that that somehow is tough love at this point.
Mm-hmm. Jeff, what's top of mind for you right now? I know that you often don't care about a lot of the macro things that are happening, but what are you thinking right now?
I think Michael hit it on the nose. I think it's all about earnings. When we came into this earnings season, they were talking about earnings being down somewhere between 4 and 5%. Now they're talking about being down 2%. Of the 500 or so companies that have reported, 73% of them, Becky, have bettered the expectation estimates. So I continue to think like Michael does. It's all about earnings, and that we're still in a secular bull market that has years left to run.
Chris, there have been so many concerns, so many worries about what's happening out there. But this morning you're looking at the futures, and we're going to open in record territory for the S&P 500. What do you tell people who come to you and wonder what they should do at this point?
Well, we see a lot of people who are probably overly pessimistic. You know, you look at the BAML Fund Survey of Managers, cash levels are higher than they have been in the last 10 years, much higher than average. We have a lot of retail investors that we speak to that are cautious. They say markets at all-time highs. They're worried about putting their money to work. And we try to reassure them. We say, look, there are things to worry about. Obviously, you've got to worry about trade. You worry about the Fed. You worry about what's happening with earnings. But along all three of those lines, it seems like things are moving in the right direction. Trade, at least for now, where you're seeing a little bit less negative news. You're seeing the Fed poised to cut this week and then probably go on hold, finishing their mid-cycle correction. But that's a big change from a year ago. And then lastly, earnings, as the other two people mentioned, not as bad as expected. So really, things are moving in a positive direction. We believe that most people are a little too overly pessimistic, and we're actually very optimistic heading into year end.
Jeff, you say that people should be paying attention to stocks that would benefit from the weaker dollar. What sectors, what stocks are you specifically referring to?
Well, I still like technology. Energy started to come to life the last few weeks. The financials that we've been on for a long time have not done much until the past few weeks. So those are the 3 top sectors that we like right here. And we continue to think, as we have since October of 2008, that we're in the greatest secular bull market of our lifetimes, and people don't believe it. Chris said it exactly right. I'm out speaking to the public, and they're not just cautious, they are scared to death.
No Kramer. All right. I know we were going to go. I was going to ask him. I mean, I'll ask you, Mike. I was going to ask you, either one of you, but S&P is going to be at new highs. What are the perma-bear? What are the guys that have been consistently bearish? I'm thinking of Mike Wilson. He said still defensive, new highs, the Morgan Stanley. Do you say, okay, maybe we don't see 2750, maybe we don't see 2500?
Yeah, I think you just revise up the floor a little bit. But, you know, I mean, the market has hit new highs months before, recessions before. It's not as if it's incompatible.
Well, is this the high end of a range or a new bottom of a range?
What we're hitting right now?
Yeah. Saut?
I don't think it's the ceiling, if that's what you're asking.